Hi everyone, today let's talk about where the pros are putting their money, then we'll get into all the usual data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So where would the pros put $100,000 right now? Let's take a look at what they got. Got a couple of big investors, advisors from Richard Bernstein, Tallbeck and Capital. And let's see, they got US small caps, definitely been on that train. I've been liking the Russell. I think these have a lot of opportunity. They are definitely relatively cheap, significantly so, compared to the mega caps. And if they do recoup some of those gains, I think the Russell is going to be in for a big move, and that's one of their trade ideas here. Russell 2000 growth, IWO. Something to watch for. And then the S&P 600 small caps, SLYG, as another opportunity there. They think small caps are poised for a big comeback. Russell 2000 has been relatively excluded and underperformed the S&Ps. I've been saying that for a while. I continue to like the Russell. You do have to think about the balance sheet. 40% of the debt on the Russell is short-term notes, which should be in a better position now that we're starting to see those interest rates come down. If we do get a recession, they're going to be pummeled pretty dramatically. But they do have a ton of potential for growth, an average of 41%, much higher than the 14% forecasted for the S&P 500. And not only that, but there are a bunch of software as a service, AI companies getting thrown into that Russell 2000. Again, something to think of there. And then their second thought is gold, silver, and uranium miners. So miners, again, we've talked about gold miners. That was a long time ago. We've been watching gold on this most recent run. Talked about uranium a long time ago as well. You can see GDX, URA. Maybe we'll take a look at URA in another video, but definitely a hedge on inflation, hedge against the dollar continuing to sell seems like something that's going to continue to happen here. We'll definitely take a look at the dollar later. And you can see cumulative returns for gold during risky times tends to do quite well here. Flash crash, 4.7. Trade war recession fears, 5.6%. 2008 crisis, 31%. So gold is a good thing to have in your portfolio as a whole. And again, not just gold itself, but gold miners, silver miners. Looking at the fear and greed, we finished the week at a 63, up from a 47 a week ago. You can see we continue to rally here to a new high. The high was at 65, the previous peak here 63, so we're still right in this zone, starting to get very close to those overbought conditions at a 75. Usually when we get there, that is the top of markets and you see some kind of consolidation. So again, markets are getting close to those overbought conditions. We are at all-time highs. We saw those dojis at the end of the week, and you can see most of the indicators here: strength, extreme greed, momentum, greed, breadth also in extreme greed. And then we have put call ratio has neutralized. It's not all the way in greed. That's usually down around the 0.6, 0.62 area. And then looking at volatility, this continues to pull back. It's still hovering around the 14.5 area. And then safe haven demand neutralized here. Bonds and stocks have been hovering for a little bit. And then junk bonds still in extreme fear, the last metric in fear. Moving over to the AAII survey, I was looking for this to kind of continue to drift lower, get a little bit more bearish price action, but then we got another spike here and we are right back to those extremes on the bullish side at a 50.8. 51.2 is just about as high as it gets. The 1 year highs is 52.9, so right in that zone. Again, very, very bullish conditions. The bear is getting squeezed again down to that 24-25 area. And then interestingly, neutral is back to where we were at the end of August here in that 21 to 22 range. So not a lot of people in the middle. And again, as a contrarian metric, the bull side is very, very high. And usually that's when markets start to top out, just like we saw last time, 51.2, and then that drifted lower. And now we are right next to that same level at 50.8. Moving over to seasonality, which has been pretty accurate actually this month. Based on this, the 20th was the top of markets for this month, right in here. It hit that on Friday, and now all the way up until the 27th, so all of next week is supposed to be bearish conditions. It'll be interesting to see if the markets continue to follow this metric, so bearishness up until the 27th, following that quadruple witching that we had on Friday, and then at the 27th, you do see a little bit of a bounce into the end of the month, with a slight rally on the 30th. Moving over to the economic calendar for Monday, you do have global U.S. manufacturing PMI, global services PMI. For Tuesday, not a whole lot. Consumer confidence, definitely going to be interesting at 10 o'clock. To your note auction. For Wednesday, you do have new home sales, 5-year note auction. And then for Thursday, GDP here, durable goods orders, as well as initial jobless claims. You do have Fed Powell speaking. He just spoke. I'm not sure he's going to say anything different, but anytime he says things, it usually affects markets. And then you got the 7-year note auction, as well as Fed balance sheet. And then to wrap up the week, we do get core PCE and headline PCE data, as well as Michigan data and consumer sentiment, as well as Atlanta Fed GDP. So a little bit of inflation data there to wrap up the week. Moving over to Max Pain for next week, we have 555 for Max Pain, stock price 570. Put call ratio still extremely high there at 4.329. Very, very high put call ratio. That does put a little bit of a damper on a bearish thesis. Usually when it's that high, markets struggle to go lower. There's just too much bearishness in markets. Put walls there at 550 and 555, so right in here. Top of the puts is right here at 567, and we're already above that level. Call wall 577. So kind of a weird one this week. Definitely a little bit of room for some downside. 560 maybe, 557-ish right in here. But then there's just too many puts here in the market. It's probably not going to fall too much further than that. So 1 to 2% at most. And then I would expect some buyers to come in around that level. Moving over to the charts, starting off with the S&Ps on the weekly here, you can see we did get above that trend line here on a weekly basis. We got a new all-time high close for the weekly chart as well, new all-time high wicks. And looking at that momentum, we are still seeing those steps to bullish, but we've seen this before. We had a couple of those, and then we got a big down candle right at the trend resistance. The momentum is not very strong. The dip low was not very strong, so usually you want to see a little bit stronger push down to get that stronger push up, and it really hasn't happened that way yet. And you can see the RSI is right at that SMA again, looking for a retest there. The volume on the week was very powerful, so that's a pretty good indicator of some potential for another push up to this trend line here around that 57.93 area, which would give you about another 1.5% of potential upside for next week. We'll hit the SMA and then see what happens after that. So overall, the weekly chart still looks pretty good. And then looking at that daily chart, it doesn't look quite as good to me. You can see the gap up, pretty much a doji, and then a down candle, hanging man style candle on the daily. And you can see most of that volume came on that hanging man candle, which is a little bit concerning. Momentum here, still good. 2 steps to bullish. Based on that, you would expect more continuation there. You also retested these highs back here from mid-July with that wick down, touching these levels as well. Didn't quite get as low as the mid-August highs, but definitely throwing some wicks, finding some support. But typically hanging man candles are bearish candles, so a little bit of mixed signals, not getting clear direction, but overall the trends are still bullish. Moving over to the Tasty charts here, you can see that up candle hitting that second ATR band. That's at 572.91 right here. Touched that level. The high of the week was 572.88, so just missed it by a few pennies, but I would call it a touch. If this continues to rally here, your upper ATR band would be 587.73, which would be a pretty decent move. That'd be about another 20 points up to that upside. We'll see if it can get that rally. Overall, this is still a low, higher low setup, looking for that higher high. It does have some good structure there in my opinion, but on the shorter time frames, we are pretty extended, so you do have to kind of balance those two. And then looking at the daily chart, you can see we did flip to bullish conditions on that Thursday candle, established that ATR trailing stop down there at 542.37, and then it did step up on Friday to 543.86, so bullish conditions here. Short-term price target would be that 579.52 level. That's your upper ATR band. And you can see we did reject off of that second ATR band, which was at 572.21. So you do have a little bit of room there, about $4 or around 1%. Volume coming in on this up push, looking for that upper ATR based on this structure. Moving over to the NASDAQ chart on the weekly, this doesn't look nearly as clean. We're still hovering back here from the mid-August highs. We have not taken out those peaks, and we're well off of our all-time highs from the beginning of July. Still has a low, higher low setup. We did add some trend lines here, and then looking for a push to that next trend line would be around the 20,300 area. We did break this on that Friday session, Thursday-Friday session. Momentum still stepping to bullish, but RSI still looks a little bit bearish. At this point, again, to me, this still looks a little bit more like a consolidation. action. We've been seeing that across a lot of the big tech companies. And for me, this still kind of looks like we're sideways choppy. It wouldn't shock me to see a little bit of a rejection from this peak here. And from that all-time high, we're about 3.5% off of that level. So still looking at a little bit of a rejection from there. We'll see how it plays into this next week. But based off this trendline break, you should look for another push to that next level there. And then looking at the daily chart again, you can see held support here, gap to the next level, sideways candle, hanging man candle, held the trend line. If that breaks here, I would expect a bit more bearishness, at least back down to these previous lows here, which is about 2.5%, 2.25% down to that zone there. Momentum still bullish, RSI still bullish, so as long as this structure holds here, you're looking for a bullish push. If it breaks down, we're looking for about a 2.25% move to the downside. But right now, everything says that this should hold, especially if we get a break of this high from mid-August. The high of that candle is up around the 19,915 area, which we did touch on the Thursday session and then pull back a little bit. So definitely some sellers still hanging out in this previous high area. Moving over to the Tasty charts here for the Qs on the weekly, you can see that first ATR band is currently acting as resistance. That's at 485.71. Touched that this week and then pulled back. Momentum still fading here. Not a ton of volume there. Still bullish conditions on the weekly chart. So as long as that holds, we're still looking for another potential push up. Second ATR band would be your price target if this one breaks. That would be 504.49, which is basically in line with the all-time highs once again. And similarly to the S&Ps here, you can see we took out that ATR trailing stop, so we're back into bullish conditions here on the daily with your trailing stop at 453.75. And really what this is telling me here is that this is more of a consolidation. So we took out the trailing stop here, got that big bearish move, came back up, rejected off of there, but you can see we held that 144 EMA. Now we're testing that level once again. So a little bit of choppy action, no clear trends. And if you look at these ATR bands on the daily chart, they are basically completely flat here on the NASDAQ. So this is sideways consolidation. And if that's true, then you would expect a rejection off of this level, a push down to test these most recent lows, maybe a higher low setup, some kind of sideways action, which would push you back down to that ATR trailing stop somewhere in there around the 450s. So not looking for major trends based on this chart. Moving over to the Russell here on the weekly, you can see we did get a push right to that trend line and the level 221.49. So we did get the candle break. We expected that. Pushed right through 218.79, and that break should have pushed you right here to that next level. You did overthrow it pretty strongly, but then we held the level on the closing basis. Broke it by just a few pennies, but realistically, you're right in that zone, looking for a break on a closing basis from this 26 August week. If it does break here, your next level is 226.02, and then we'll start to extend out this trend line. See how that would look. Somewhere in there, that would give you a price target up around 230. I still like this. It's been really choppy, but we're right at these most recent highs, looking for another break candle to the upside. I've been bullish on the Russell. I still do like it. A little bit concerning that we couldn't hold some of these gains above this level. We did throw a big wick about halfway up the candle, so still mixed signals there. Momentum bullish, RSI bullish, still looks good. And then looking at that daily chart, just to show what I was talking about, you can see the big up candle on Thursday, pulled back, tested the trend, held that level. I would have liked to see it hold a little bit better, some of those gains from Thursday, and you can see that momentum is flat. We talked about it on the Friday video. If this steps down one more candle here, you should be looking for a little bit more pullback because that momentum is going to get a step towards bearish. RSI is going to get closer to that SMA, and then we could see another one of these kind of moves where you do get a pretty decent pullback, still establish a higher low. Your price target for that would be around that 215.42 level, right in this consolidation of EMAs. Touch that zone and then look for a push to that next 232 area. Certainly possible. It's been kind of a wide-ranging, slowly grinding trend with highs that are just barely higher than the previous. And then looking at the Tasty charts here, you can see that upper ATR continues to swing to the upside, so still bullish conditions there. Lowest ATR, a little bit more gentle of a slope, but it is drifting higher slowly. A little bit of volume this week. You like to see that. Expect some continuation off of that. Still bullish conditions. Nothing's really changed here. Looking for a test of that second ATR, which would be 227.94. Pretty much in line with those previous highs like we talked about. And then if we did get a very powerful push, your next ATR band is all the way up at 237.16. So still bullish conditions there. Still expecting some bullishness on the follow through candle. And then looking at the daily chart, not as bullish here. You can see that kind of sideways choppy action. The ATRs are still drifting higher, but they're a little bit lower than they were here, so still a little bit sideways choppy. Low, higher low setup, bullish conditions. We did get that flip on conditions on Thursday, just like everything else. We were a little bit hesitant there. We're technically back into bullish conditions. Still might see a little bit more pullback, but you would expect it to get bought up, and then we'll see what happens from there. ATR trailing stop, 208.19, and then your upper ATR band for that upper price target would be 228. Again, pretty much in line with the same levels that we talked about on the weekly. Moving over to the Dow, up week here, 1.36%, stopped right at the trend line as a point of resistance. We've been watching this trend line for a while, and it's marked many support and resistance lines over the last several weeks, going all the way back to June here. But now we're at this level, waiting to see if it's going to break out. Got some trend lines back here that I could start to extend out if we do see some further movement to the upside. But right now we're in this zone, looking to see if it breaks this trend or not. And extending out that next trend line here, that would put a price target of around 433. It's a long way up from here. That would definitely be very extended. You can see RSI is already at a 66.14, but we'll see how it plays. Point of resistance, definitely short-term extended. And then looking at the daily chart here, again, you can see very similar to everything else on the Friday. Thursday, gap up, held the level, gap down, found a little bit of support, momentum flat, RSI fading slightly. So waiting to see if we're going to get a little bit bigger pullback. 9 EMA sitting right there at 415.24. If it breaks this trend line here, that's where I would be looking to test, which is actually right at the lows here from the 17th and 18th. Moving over to the equal weighted S&Ps, similar move, 1.39%. Got above this trend line here, looking to push to the next one up here at 179.87. Next week's high would be around 180.80. Momentum still bullish. RSI, clear divergence. So your high on RSI was going back to the 26th. Your RSI peak now is at a 65.99 versus a 69.64 with much higher prices. So strength continuing to fade in this uptrend. Doesn't mean we can't get one more push, hit that price target, and then see the break in the following week. But right now, everything continues to look bullish. And looking at it on the daily chart, you can see the gap up, hold, gap down, test the trend. As long as that trend line holds, you're still looking for a push to that next upper trend. And then if it doesn't, then you're looking for that 9 EMA, similar to what we saw on the Dow. Moving over to the ratios, looking at the SPY Russell and the NASDAQ SPY, you can see the SPY Russell was bearish, hanging man candle, RSI selling off. Momentum looks like it's set to reaccelerate here. It held the trend after pushing all the way down to that 55 EMA. This is still starting to look like more consolidation. Tried to break higher, couldn't hold it. Tried to break lower, couldn't do it. Now we're consolidating. I think this is going to continue to roll here. So looking for more Russell outperformance. And then look at the NASDAQ SPY, 2 bull candles in a row. It's finding that resistance at the 9 EMA. That's at 347 right here. That's where we are on a closing basis. If it continues to sell from here, obviously that's going to be bearish. But right now it looks like a bit of a double bottom. So NASDAQ hanging in there. Let's go ahead and extend out that trend line. Got very close. Maybe we see one more push into that zone up around the 3.51 area. Moving over to the SPY divided by the M2 money supply here, you can see that level is 27.25. We got very, very close to it here. I think we're going to get up into that zone this week. Momentum still swinging to bullish. RSI continues to hover just below the SMA there, so you would expect a test of that and then see another rejection, but we'll see what happens. Expecting just a little bit more bullishness into this next level, 27.25. Moving over to Apple and Microsoft here. Again, look at that volume on Apple. 550 million shares traded this week. More than double the previous week and almost 3 times 2 weeks ago. So big volume. And it was a strong candle. So that's interesting. We could get continuation on that. If you watched the Friday video, we talked about how a lot of that volume came on the Friday, which was a selling candle. So something to consider there, but it was a strong candle, 2.5%, tons of volume there. And then Microsoft, not as strong on the volume. It's about flat from the previous week, but that has been 2 up weeks here. Closed around the middle of the candle. 440.72 was the level. We hit that level. Now we started to see a little bit of a pullback there. Momentum looks better on Microsoft to the upside, whereas the momentum here on Apple seems to be fading and flatlining. You would expect a rejection here based on these indicators, whereas Microsoft looks like it's on an upswing potential to that next level at 453.30. Moving over to Tesla and NVIDIA. Tesla had a strong breakout here above that 232.57 level. I like this move. Momentum still, RSI is still bullish, looking for a push to that 255. Based on the weekly chart, this looks like it's going to get there. The Friday candle was an inside candle after a strong Thursday, which was a little bit concerning, but based on this weekly chart, should be good to go up to that next level here. And then looking at NVIDIA, doji candle, inside candle on the weekly, broke below this trend line, consolidation of EMAs. I think this is going to go lower. It is kind of wedging here. You can see lower highs, higher lows. So it's a little bit of a wedge pattern, but I feel like this is going to break lower. Could go either way, but I like it to the bear side. Moving over to Amazon and Google here, you got Amazon with 2 powerful weeks in a row, 8.8%, 2.74%. Broke this level here, headed to the trend line up here, which is up around 199.80, 200, right in this all-time high area. So Amazon, very strong, momentum swinging, RSI swinging, everything looks good, good volume there, closed pretty much on the high of the candle. Amazon looks pretty strong for a continuation. And then looking at Google, more powerful than I would have guessed here, 2 stacked candles, closed on the high of the candle, above the 9, above the trend line. Momentum swinging, this might have a little bit more in it. Your next level of resistance is 170.95, and then behind that, you have the 21 EMA at 172.28. Moving over to staples and discretionaries, 2 very different charts here. So staples has been on a run. You can see all of these green stacked candles with one pullback here on the 5th. And now we finally got a pullback, 1%. We did reach a new high, added some levels here. That level was 84.53, right at that high. Obviously, these are all new levels established by this most recent run, but now we have a step down on momentum. It's super overbought, starting to pull back. Still could take a little bit of consolidation before we start to see a more reasonable pullback, but this seems like the start of it. And then looking at discretionaries, much different chart, looking for a push to this next trend line. If it breaks 197.14, the next level is going to be around that 250 level. Right here, just beyond it, 201.27 or so, right in this zone, does look like that next potential for a high. If you kind of exclude this really deep cut low, it has been higher lows. And on a closing basis, it's still higher lows. It's just that wick was so extended here with the massive gap down on the Monday, touched the 200 and then rally. But if you look at it on the wider time frames here, it does look good up to that next 200.5 level. Moving over to oil and gas and technology, oil and gas had a strong week, 4.87%, huge volume, big move up right to that 135.07 level. Close below it. If it gets above it, I'll probably reestablish that position. It's right at the RSI, SMA, and you can see volume ramping, momentum stepping to bullish. This is still a medium-term downtrend. You can see all the way back here since 1 April, we've been pulling back. So you do have to keep that in the back of your mind. This could just be a counter trend rally, but this could be a double bottom. It's definitely found some support in here. 200 sitting down there. We'll see how it plays. I would say short-term bullish up into this 140 area, and then probably going to get a little bit more selling after that, similar to this move here. Big up candle, a little bit of a continuation, then further selling. And then looking at technology, it's right at the trend here, right at 223.96. Next week, it's going to be up around 225. And then if it pushes through here, maybe we see a push to this upper trend here around 241.60 or so. Momentum swinging, RSI not as confident. Moving over to wood, the timber ETF as well as gold here, you can see wood breaking out, big wick high right to these relative highs, and now we're going to see if we can get a continuation run on that. Momentum's bullish, RSI is bullish. If this continues to run, that is a little bit of a bullish indicator for economics and demand in markets, so something to watch there. This looks like a clean breakout continuation. The other thing here is that gold continues to run here, so we are still looking for that 250 price target. It's about another $8 of potential price action there. Momentum bullish, RSI super overbought, but volume ramping continues to look clean up to that next level. Moving over to 20 and 50-day breadth here, you can see both of these look okay. You can see 20-day momentum step to bullish just slightly, barely a move at all. RSI is right there, right at the level. We did get into this zone where we're finding some resistance around that 78.10 level. That has been the highs a couple of times on this weekly chart. So something to watch there, waiting to see if we get another rejection from that zone or if we're going to push up a little bit further to the 86.53 area. Right now, it's a little bit unclear. Doji candle. If we get a gap down, that's going to be terrible. And then looking at 50-day breadth here, you can see not nearly as clean. Tried to go higher. Wick rejected. Closed below the half mark on the candle, right at the level, 77.46. Very critical zone there. 77.30 was the closing price. Again, momentum step to bullish just slightly. RSI looks a little bit better on 50-day breadth. So I would say a little bit of a mixed signal. Maybe we get one more candle up here, hit that extended area on 20-day, extended area on 50-day, and then we'll see what happens from there. Or maybe this is already the touch. You can see we got here one candle in March. Next candle was very bearish and the next one was terrible. So could be a situation like this where we've already touched it, but overall, I would say maybe we get just a little bit more push based on what the charts look like. Moving over to 200-day breadth, you can see 76.04 is the level. Momentum bullish, RSI is bullish, waiting to see if this rejects again from here. I was watching this, we've had a couple of overthrows, but these usually do kick back, so 76.04 has been a very important level. We did touch it, we did reject. Based on that, you would expect a down candle next. Something similar to this 29 July candle, or maybe that 2 September candle where you get some decent pullbacks. The structure is still holding up, kind of sideways consolidation between 62 and 76. And we're still in that range just at the top of it for now. But if this is consolidation, the top of the range is usually what you sell. Moving over to the dollar, I just wanted to look at this on a little bit of a wider time frame. You can see this bottoming formation that we had in May of 21. And we had this massive rally all the way up to the peaks in October of 22. And since then, we've kind of been in this sideways consolidation. The lows here down around the current price, around 99.97. We got very close to that on this most recent wick. We're right at the 200. We got above the 200 back here in November of 21, and now we are testing that level quite earnestly. We've had some lower highs here, multiple lower highs, a little bit of choppiness, but high, lower high. Now you have a low, lower low. You could argue it's basically flat with this mid-July candle from 23, but we're right here now. We're waiting to see if this trend structure breaks. These are very important long-term trend lines here for the dollar. We've been in this long-term rally. You can see all the way back April, May of 2014, higher lows and higher highs. Then we've tapped out around that 114.2 area. And now we're waiting to see if this is structurally going to change here. The dollar looking like it could break down through these structures here and push down to the 97 area. If that happens, that could be quite bullish for equities and could give more rally to this most recent push. Moving over to JNK and TLT. JNK continues to rally, 0.7, right above the level, 97.69. 200 SMA is your next one at 98.37. It's been such a long time since we've been anywhere near that 200, all the way back here around 106.8. You can see this consolidation around 110. And then we sold off super dramatically, got all the way down to the 86 area. Now we're starting to rally back, 97.7, right in this zone here, looking for a touch of that 200, definitely a move to the upside into that zone here. The first test usually fails, but not by much. Establish a higher low and then push again, so something to watch there for on JNK. Bonds continue to look good. And then TLT just can't seem to get above this trend line here. Let's go ahead and extend that out. Touched it here twice, couldn't quite get there one more time, pulled back to this trend here. Did break down below the 100 level. I still think this is going to continue to push to the upside. I don't think this structure is going to break by any means. Probably just a little bit of a pullback. We've seen it a couple times. Establish a higher low and then push once again. If it gets back above 100, 102.50 is the next level. Moving over to the VIX, 2 down candles, still holding right here, added a little bit of a higher low from this 14.7 level. Still down candles, could just get a little bit more continuation. Once we get here though, I still think we're going to find a little bit of a bounce. It's not super often you get into these super low levels around 11 to 12. We were there for a while, but you can see the move down here from the COVID high down to this consolidation. 14.7 was the low. Then we saw another spike up into the 30s. Then we pulled back a couple of times, found some support there, and then eventually kind of settled in this zone for a while. But seems like we're going to stay a little bit more elevated in this zone. VIX staying with some higher lows while markets are continuing to rally. It's definitely something to be concerned about. Moving over to my accounts, I forgot to roll out my Qs position, so I guess those shares got taken away, which is a little bit of a bummer. I did mean to roll those out one more day, but we'll see how it plays. Maybe we get a big pullback and I can reestablish at a cheaper price, or maybe I shouldn't establish at all. I did mean to let the XOP shares go. I am watching that as a zone of resistance. Otherwise, current positions, just the Russell here at 219 for $5 credit, making some money on that covered call while the Russell kind of hovers in this zone, watching that one closely. Overall, not a terrible week, made a little bit of money, but being cautious at this zone of resistance. But if we do get that breakout, I'm definitely going to reestablish all of these positions and catch that next move to the upside. Let me know down in the comments section where you would put $100,000 right now. Do you like small caps? Do you like gold? Or what else is in your playbook? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.